Is that you? Daniel Bethea is in. Is that you?
Yes, ma'am, baby. I'm back.
What's up, everybody? Hey, happy Sunday, everybody. We're about to get things started. It is the first of the year. Look who made an appearance. Look who made an appearance.
Yes. I'm back, baby.
Good to see everybody. Good to see everybody on. Dan, I think they're sick and tired of hearing from me every week. So I'm very thankful that you were doing well when you were back.
Yeah, listen, you already know the drama and the craziness that I've gone through with the whole COVID situation. Whole family was pretty much shut down, but we're back. We're back. We're feeling better. And I'm ready to rock and roll and teach you guys some
very good
stuff.
So. Everybody's been asking about you, so they are delighted that you were back.
Yeah, and I want to say thank you all for all the prayers and just, you know, sending up that encouragement to God. It really came in handy. It really came in handy. So I really thank everybody for everything that you guys have done. So
very good, very good. Awesome. All right. Well, it is now 3:06, and I just wanted to jump on here for a moment to say hello. Welcome, everybody. You guys, I know you for the last 3 weeks, you've been missing your Sundays to kind of get ready, but I've been hoping that you've been staying in tune with Go Live sessions. I've been hoping that you're staying in tune with some of your favorite educators that are on the Go Live sessions and within the company. So you guys are in an awesome place. We all are at an awesome place right now. If you noticed a shift of conversation has really started the year off, really talking about investing. And it's not just this group. I'm really hearing it outside, other people online. It's like, you know what? We went through a whole lot of crap and adjustments, a lot of adjustments for 2020, but we're all here. We're all here. Some of us have lost, and I don't mean just people. We have lost things, and we have lost things. You know, my parents out there, you all are teachers, so you lost, but you gained a lot of wisdom as well. But investing is the hashtag going forward, so that you guys know what is the proper way that you need to be investing. Tonight's conversation is really going to be about risk management. So it, you know, no other than Daniel Bethea. Daniel Bethea and I have been working together for the last 3 years. So for those that haven't seen us kind of rocking in the same space, for the last 3 years, we've really been working together, and he really pours a whole lot into the group when it comes to education. Things that keep us plugged in rather than just trying to pull it from YouTube and is it on I Am Master Academy, really just real deal shit, you know, just excuse my mouth, but real deal stuff just to keep it, you know, simple for us to really make money. So I know that going forward, investing is the top of all of your abilities. Every single thing that we're going to be moving forward with is really just to keep that money in mind. And Tuesday, I will see you guys Tuesday, Wednesday, and Thursday. I think, you know, most of you have already been in that space. Tuesday, Wednesday, and Thursday, we're still going to continue doing the Harmonic Scanner Money in Minutes. So I got something for you guys this Tuesday. So definitely make sure that you come on board. Come bring a friend. Don't come by yourself. Just bring someone, because they need to hear what we have. They need to hear what we have going on. And if investing is the footprint of what's going on for the next 12 months and going forward, you got to show them how it works. So definitely introduce somebody new onto the platform. As long as they're welcome from you, then we definitely want to welcome them onto that platform. Any other announcements that I may have? Cool, you go and step off, sir. Look, so going forward, we're going to make sure also that the calendar is going to be set differently, because the space that we used to have in Bowie, we no longer have that live space anymore. So Daniel and I will get together over the next day or so, make some adjustments to the calendar so that you'll know what needs to be done going forward. So for those that used to come out to the Thursday and Saturday sessions, we're not going to be doing that live, but we're going to be doing it more online. and we'll pick a day. So if you have some entries of what you may see that may be helpful, I'd like your input. So what I will do on the Facebook page is put a poll on there to see what day would you all like. Now we're still going to have Sundays.
Right.
That's his day. All right, that's it. But as far as getting a presentation and Forex training, if that's something that we need to do extra during the week, I'm going to put a poll in the Facebook group. And if it's something that you can, please help me, help him, so that we can figure out which day that we can put aside to offset that Thursday and Saturday training. Because otherwise it's going to be in my basement. Y'all can't all fit in my basement.
And especially
so we'll have to
going on right
now. And so we used to do the trainings in the basement, and it was great. A lot of you guys, you remember, I used to be in the basement first, but we have to just be super careful, and I'm okay with it. But if we need to do more one-on-one trainings, make sure that you click on that link on mytradinglounge.com and schedule a one-on-one with either one of us. All right, just schedule a time with either one of us, and then we'll make it happen. We'll make it happen because we want to make sure that you're getting what you need in your trading sessions. All right, so I want to turn it over. If there's any other questions about the week, this is it's a big class that we've been teaching on mainly over the last 2 months of the end of the year of risk management. So no other than Daniel Bethay can really take this away best and really moving forward in this. Are you taping this, sir?
Yeah, I'm recording it right now. I'm recording it.
All right, so y'all know, you can go back to this later and take a look at it. It'll be uploaded onto our YouTube page. So you guys have an amazing training session. I will be taking notes as always. And Mr. D, take it away. I'm glad you're back.
Girl, I'm glad to be back. Listen, I done lost weight too. I can see it in my face right now. You know what I mean? But listen, we ain't about my weight right now. It ain't about my weight. What we're going to do is we're going to be covering risk management. This is something that is very, very, very important when it comes down to your trading, because last year we've been doing a lot of teaching, but we haven't really taught a lot on risk management. Now, granted, that was something that I completely just eluded altogether. I'm a novice, was new, didn't really understand a lot. But when I started to deep dive into risk management, it became that much more clear to me why I was not progressing in my trading like I could have been. Now, a lot of the trades and the mock-ups and in which I've done, they were beautiful. But because the risk management wasn't in place, it cost me more money than me making money. So we're going to correct that this year. All right. We're going to correct that this year. We've already started over the last couple of months. But right now, what we're going to do is we're going to cover risk management, and we're going to start covering. We're going back to the basics, basically. All right. We're going to be covering risk management. We're going to be covering market structure, and we're going to be covering your Fibonacci retracement tool. And that's pretty much it. All right. So what we're going to do right now, we're going to go ahead and get this presentation started. All right, let me go ahead and shift to the presentation. Please let me know if everybody can hear me clearly. Let me get some ones in the chat group if everybody can hear me clearly. And I want to make sure that everybody can see my screen. All right. All right, perfect. Okay, so risk management. This is going to be the success of your trading. All right, now this is what we're going to cover. We're going to focus on what is risk management. That's first and foremost. What is risk to reward ratio? What should I risk? This is going to be our focus. All right. Now, after we finish with the focus part, we're going to talk about the calculations of everything. How do I calculate my risk to reward ratio? All right. What should I be aiming for? Because that is going to be key to your success. What you should be aiming for. And then lastly, what we're going to do is we're going to talk about the trade application, how to properly use your lot size calculation tool inside the Harmonic Scanner. Okay? You guys got that? All right. So first things first, what is risk management? All right. So risk management is nothing more than the ability to control the risk you are taking with your trade capital. Now, what is your trade capital? Your trade capital is whatever money that you're willing to put into the market to trade with. Okay. So your risk capital, once again, is the amount of money that you're comfortable with losing if it comes down to you wind up losing that money. All right. This amount of money should not affect you financially. I need you to understand that. So if you don't have $1,000 to lose, do not put $1,000 into the market. Okay. You put into the market what you are comfortable with losing. That is going to be your risk capital. And your risk management is going to be basically controlling your risk every time that you trade. Now, risks per trade, this is exactly what we're going to be focusing on. Because what we need to do is make sure that you are basically risking a very minimum to make the maximum. Okay. You need to make sure that you're minimizing your risk in order to maximize your gains. All right. Now, your maximum exposure. This is something that we've talked about before, but I don't think that we really went into depth with. All right. Now, your maximum exposure is simply this. When we go to look at the amount of money that we have in our account, we always tell you to trade basically 0.01 lot size per $100 that you have in your account. So if you have $3,500 in your account, the maximum amount of risk that you should be taking in your account is a 0.35 lot size. Okay, $3,500, you basically be trading with a 0.35 lot size. Now, that does not mean that you are basically going to be trading with a 0.35 lot size every single time. Your maximum exposure is that 0.35 lot size. So you cannot have multiple trades in with a 0.35 lot size and expect to win. And the reason why is because that is your maximum exposure. You can possibly blow your account very, very quickly if one of your trades go in the opposite direction. All right. So what we want to do is we want to make sure that we understand our maximum exposure, understand our risk per trade, understand our risk capital, and making sure that we are doing things properly, utilizing proper risk management. All right. Now, let's cover risk to reward. Risk to reward is very, very simple. Okay. It is very simple. All you're doing. Okay. Well, let me cover this first. Risk to reward is a simple calculation. Okay. It's a very, very simple calculation on how much you're willing to risk in a trade versus how much you're aiming for in profit. Okay. It's how much you're willing to risk versus how much you're aiming for in profit. That's all risk to reward is. Okay. What we want to do is minimize the risk and maximize the reward. Okay. Now, to increase your chances of profitability, what you want to do is you want to make sure that you have a potential trade that is at least a 1-to-3 ratio. So whatever you're risking, your reward should be 3 times greater than what you risk. Okay. This was something that we completely missed, or should I say I completely missed in the process of learning all of this stuff. When your reward is less than your risk, we really have a problem. Okay. So what we want to do is we want to make sure that you give yourself a 1-to-3 risk to reward ratio or more in order for you to be stable in a sense in this game. All right. So what I want you to understand is you should never risk more than 2% of your account, your trade account. Never risk anything more than 2%. Never risk anything more than 2% of your account. All right? I need you to understand this. And the reason why is you will basically be able to stay in the game a whole lot longer with the amount of money that you have as your trade capital if you wind up just using 2%. We're not trying to take over the world today, okay? But what we want to do is gradually build our accounts until we make those millions. Simple as that. We do not, listen, my father told me a long time ago, Rome wasn't built in a day, but it was built by brick, all right? And it takes time in order for you to be in a place where all your worries are basically taken care of because you now have the amount of money that you need. This is not a race, okay? This is not a race. This is going at your pace, but I need everybody to understand 2% is all you're risking in your account. All right. Now, what should I be aiming for? What ratio should I be aiming for? You should be aiming for anything 1 to 3 and above. And what I mean by that is you can do a one, you know, saying, say if you have like $1,000 in your account, okay? You have $1,000 in your account and all you want to risk is $10. Well, your profit goal should be $30. I need you to hear me on this. Your profit goal should be $30 or higher. It can be $50, $60, $70. But understand the risk to reward. You're risking $10 to make $30. Okay? Now I want you to see this chart over here on the side. Okay? I want you to pay attention to this chart on the side. And the reason why is because you basically, it maps out everything for you and understand exactly why we're risking 10 in order to get 3. I mean, not 10, 1 in order to get 3. Okay. Now, on this side here, we have 10 trades that we win. 5 trades that we win, 5 trades that we lost. Okay. 10 trades. And I want you to understand basically how this works. You have 1 trade, you lost $1,000. But your second trade, you came back, you won $3,000. Your third trade, you wind up losing $1,000. Your fourth trade, you came back and you won $3,000. Fifth trade, you lost. Sixth trade, you won. Seventh trade, you lost. Eighth trade, you won. Your ninth trade, you lost, but your 10th trade, you won. Each win gave you $3,000, but each loss subtracted basically $1,000 from you. But if you look at your losses, you only have a $5,000 loss, but your win, you made $15,000. So that equals out to about $10,000 in which you basically made in the market. So this is one of the main reasons why it's better to go with a 1 to 3 ratio or greater than sticking to a 1 to 1 or a 1 to 2. All right, you guys understanding this? Do you guys get this? I want to make sure. So listen, drop comments in the chat group. If you don't understand something, I want to make sure that you understand exactly what we are doing. Okay. I need you guys to understand this because this year's trading is going to be absolutely different. It is going to be absolutely different. We're going to be plugging in this risk management and we're going to get this thing down and we're going to make sure that everybody is on the win streak. Okay. Because I'm even going back to the basics. I'm going to make sure that my risk to reward ratios is perfectly clear. Okay. I want to make sure that I am risking less than what I am aiming for as far as my reward. Okay. Now, trade application. Perfectly put. What we're going to basically use, all right, a lot of times what we do is we use a spreadsheet to determine what our lot size will be based upon our account balance, all right? Now, what we basically do is we're going to calculate 2% of your account to determine your maximum loss, all right? We're going to be using, like I said, 2% of our account balance to determine what our maximum loss is, all right? And once you have your maximum loss, your stop loss should not exceed your maximum loss. All right. It should not exceed your maximum loss. So basically, what I'm saying is, whatever 2% of your account is, you should not be risking no more than that 2%. Period. Okay. Now, once you actually do your analysis, I want you to go ahead and take that trade with confidence. All right. But understand, you are not risking no more than 2% of your account. Now, if you don't know how to actually calculate what 2% of your account is, just pull out a calculator, type in the amount of money that you have in your account, and then multiply it by 2 and then hit the percent button. That will clear everything up for you. All right. So you should not be risking no more than 2% of your account. All right. That is going to be your maximum loss. All right. Now, your lot size conversion chart. Need you guys, I don't know if everybody has this, but you need to have this. All right. This in itself is going to help you tremendously as you move forward. All right. So, what you need to know, per $100 in your account, you should be using a 0.01 lot size for your trades. Okay. Now, say your account balance is $3,500. All right. Say it's $3,500. Your maximum lot size that you can use is going to be right here. 3,500 divided by 100 comes out to 35. Okay. What you do is you move your decimal over 2, and this becomes your maximum lot size. Now, what do I mean by your maximum lot size? If you're going to use a 0.35 lot size on one trade, do not put in any other trades. Need you to hear this.
Hey, can you say that again for the people in the back?
Listen, if you 0.35 lot size, if you are using this lot size, do not put in multiple trades at this lot size. You do not exceed this lot size if you're going to be using this in a trade. This is your maximum lot size in which you can use on your account. Now, if you want to put in multiple trades, that's perfectly fine. But what you're going to do is you're going to divide that bad boy up, because essentially you should not be exceeding a 0.35 lot size for your account.
I think that hit gold for a lot of us, Dan.
Mm-hmm.
Thank you for repeating that.
Not a problem. This is where a lot of us have gone wrong, especially myself. Because what happens is our margin levels drop drastically. And we're not paying attention. One of those trades wind up going in the opposite direction of what you want. And the next thing you know, now the broker's like, listen, give me my money. Your account balance cannot hold these trades. So what I'm going to do is I'm going to snatch your money and try to free up some of your margin so you can continue trading. Guys, we're not in the business of losing money. So once you figure out your maximum lot size, do not exceed that lot size for your trading. I need you guys to understand that. All right. Now, Harmonic Scanner. Beautiful tool. And they have some awesome stuff in here. Okay. Now, one of the things that I want you to notice right here at the top of the Harmonic Scanner is a calculator for your risk management. A lot of people don't know about it, you know what I mean? But hey, it's there. So when you go to use the Harmonic Scanner, whether it's in the morning, whether it's in the evening, so on and so forth, what you want to do is you want to make sure that you click on that before you wind up taking your trade. Now, the reason why is because it gives you the ability to put your account balance in, okay? The amount of risk that you want to take, 2%. Remember, 2% risk. It will spit out your lot size, make sure that you have your pair in, and then you can basically put in your entry and your stop loss for that particular trade. And what it'll do is it will spit out your lot size for you based upon your account balance, your percent as far as your risk is concerned, and it will make sure that you have the appropriate lot size. So let's kind of go over right now to the Harmonic Scanner. Let me skip through this. Now, does everybody understand exactly what I've been talking to you guys about today? Please let me know, let me know, let me know. Let's see. Actually, no, let me do this. Let me do it this way. Let me go into Center. One second, guys. All right. Now, everybody knows Harmonic Scanner. I pray everybody knows Harmonic Scanner. This is something that we use. This is one of the biggest tools that we use at IM. Now, just to make sure that I'm covering everything for you guys, always understand this is going to be your time frame in which you're going to be on. All right. These are your indicators. You really don't need a lot of indicators, but the indicators in which we use is the parabolic SARs. Okay. That helps you to understand exactly the direction in which the market is moving in at this time. So really easy. Just type in PAR and you'll see it right there. All you got to do is tap on it one good time. All right. Now, once you tap on it, you'll see these parabolic SARs actually appear. Lori likes to call them the footprints. So, all right. So we're going to see our footprints. Now, this is how you actually blow it up. That way you can visually see it a little bit more. What you're going to do is you're going to click on this gear in the middle. Click on that gear. You're going to tap on the color, and down here at the bottom, we're going to thicken everything up. So I like to actually use the second one, and then what we're going to do is close it out. Now, this is a very, very valuable trade setup that is coming up. Now, when do we get in the market? When do we get into the market? We do not get into the market until we see parabolic SARs underneath this trade. Okay. We do not get into the market until we see parabolic SARs underneath this trade setup. But what we do is we're going to use this calculator first. All right. What is our account balance? Say our account balance is $3,500. What is the percentage in which we're going to be risking? We're not risking no more than 2%. All right. So what is our risk? $70. Now, if you're not comfortable with $70 of risk, reduce it. Say 1%. Now you have a $35 risk versus a $70 risk. Okay. Now, what you do is you come down. Now, this is, what pair is this? NZD CAD. All right. So what you do is you switch up your pair, NZD CAD. Okay. And now what you do is you start to plug in the entries and you plug in the stop loss. Okay. So we have an entry down here at 0.91233. Okay. Our stop loss is 0.90968. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Okay. Now, what we do is hit calculate. And it spits out everything for you. So what your lot size should be for this particular trade is a 0.17 lot size. Okay. Now, a 0.17 lot size, and I need you to think about this. All right. Is that less than a 0.35 lot size? Yes or no?
Yes.
All right. So you always have to keep in mind, all right, your maximum exposure. And what your maximum exposure is the maximum amount of risk that you can take on that account. So a $3,500 account, your maximum, because what we're doing is we're taking $3,500, dividing it by $100, because it's 1.01% per lot size, per $100 in your account. So your maximum exposure or your maximum risk in which you can take on this account is a 0.35 lot size. Is our lot size for this particular trade less than 0.35? And we've determined it was correct. Now,
Yes.
what we can do at this point is we can actually put in multiple trades, but it should not exceed our 0.35 lot size. You guys got it?
Got it.
Awesome, awesome, awesome. So when you are trading in the morning, make sure that you have already determined what your maximum exposure is. And second, make sure you use this risk to reward, this lot size risk calculator, to make sure that you are inside the confounds of your maximum exposure. All right. Now,
Question.
go ahead.
So with that said there,
Mm-hmm.
with that result of the 0.17, so which means I can make, I would do 2 trades of 0.17.
Yep. If you wanted to.
Okay.
But it
All right.
could not exceed the point.
It just as long as that does not exceed the 0.35. Okay.
There you go.
Gotcha.
As long as it does not exceed the 0.35, you're perfectly fine. Okay.
Right, gotcha. Mm-hmm.
Perfect, perfect, perfect. Now, this is something that I wanted to actually show you guys on gold. Now, this is a trade setup that I'm in This is something that I'm going to be staying in for the week. All right. I kind of peeped it out last week and started to actually do some trading on it. Gold. I tell you what, let's start with this here. Let me just get rid of that. We're going to take a look at the higher time frame. Okay, we're going to take a look at the higher time frame first. Now, on the weekly time frame, I saw this setup that was happening. And I'm just going to blow this up a little bit so everybody can see it. Okay. Now, what I noticed, okay, is this market has created a high, came back and created a low, came up and created a lower high, then she actually created a lower low. So typically what happens is when that market pulls back, this is nothing more than a pullback, she will end up dropping some more. So what I'm anticipating is this market dropping to about this level here, because this right here, all right, is a pullback area. All right, this is a pullback area from being in an upward trend. So this right here is a nice little level in which I'm anticipating this market pulling back to. The question is, when is the market actually going to turn around and go into a sell direction? Well, one thing is for certain. What type of pattern is this? Somebody talk to me. What type of pattern is this? Oh, come on now, guys. Don't be shy. This is an engulfing candle pattern. All right. We have a bearish candle followed by a larger bullish candle. So what does that mean? That means that this market has the potential of continually moving up. All right. And this is on the weekly time frame. Now, when we go down to the 4-hour time frame, let me go ahead and auto correct this. What we see is an ascending triangle pattern. This is a breakout pattern. All right. This is an absolute breakout pattern. Now, where is the market going at this particular point? How do I actually trade this? And this is something that we're going to be covering in the next couple of sessions, throughout the month, because I want you guys to understand chart patterns, chart structure, the whole 9 yards, because this is going to be key to your success when it comes down to your trading. You're going to be able to visualize and you're going to be able to see all of these different patterns, and you're going to be able to take advantage of them completely, even with the Harmonic Scanner. All right. It's going to make your trading so much easier and so much better. When we incorporate that risk management along with understanding the chart patterns and market structure, it's going to absolutely catapult you in the right direction. All right. Now, with this ascending triangle, okay, we understand that the market is going to wind up breaking out to the upside. So what do we do? How do we trade this? Simple and easy. Okay. Now we've already had the confirmation of the engulfing candle on the higher time frame, on the weekly time frame. So right now what we're looking at is a ascending triangle on the 4-hour. Now, how do we trade it? Simple. What we do is we find the previous low. The previous low is where? Right here. This is our previous low. Okay. Now what we're looking for is our entry. Where should our entry be? Right here. You see how that market has rejected several times off of that key level. So what we do is we place our entry right here. Now, the second thing is, where should I take profit be? Simply put, all you do is you measure. What I'm going to do is I'm going to measure this distance right here. Okay. Everything is based off of measured moves. Now, some people would actually measure from here to here. We're not going to be greedy with it. All right. We're just going to measure from here to here. And that's it. So what we're going to do is we're going to copy that. And what we're going to do is we're going to move it over. So this should be our target goal. But I know that there's a couple of zones in here. So what we're going to do, all right, now if you notice, you have an engulfing candle right here. This market could potentially come right back up into this zone, right back up into this area here. Okay. This market could potentially come back up into this area. But understand this is going to be a weekly trade. So that market will come up, bounce, 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 and bounce until it actually reaches its goal. So you want to just be patient and move your stop loss into profit once the market actually has you in some good profit. Okay. Now, simple. This is going to be our risk, but this is going to be our reward. This is a 1-to-4 ratio, guys. A 1-to-4 ratio. And if you don't know how to actually read it, right here is what it's telling you your reward is. It's always going to be a 1 to whatever this number is. Okay. So this is a 1-to-4 ratio. This is a very good setup. So if you guys want to take advantage of it, I'll post it out into the YouTube group. I'm not the YouTube group, the Facebook group. All right. So everybody can actually take advantage of it. Now, this is, like I said, this is going to be a week-long trade. So be patient. All right. We're not going to be here trying to get that quick money. We do those on Tuesdays, Wednesdays, and Thursdays. This right here is a long-term trade. Okay. So we're going to be utilizing this and just basically keeping it going for the entire week. Are you guys okay with that? Tell me now.
I had a question.
Go for it.
Still can't see it on the screen. What is the amount of pips that you're risking? What does it say?
Oh, the amount of pips in which I'm risking versus how much that I'm actually getting.
Yeah.
Okay. So as far as the pips is concerned, let me just do it this way. Let me do it this way. I'm gonna just
And Marita asked you a question also in the chat box.
Okay. So what we're going to be risking as far as pips is concerned, we're risking about 128 pips to make a total of, let me move this over, about 5,443. Sounds good? So once again, we're risking, get that there. All right, so we're risking about 128 to make about 5,443.
500?
5,000. Right here, you see the amount of pips in which we are achieving. 5,443.
My screen's just small. My bad.
Yeah, sorry. Can't help you on that one. All right, so let me go back into the chat group. Let me see what the question was. And it's not coming up for me. Where is the chat box? Oh, here we go. All right, so
that was a few screens ago, basically wondering why you chose Take Profit 2 versus 3, because their box that you were using to analyze everything was over it. So I just wasn't for sure. And it was just a general question.
What was that in the Harmonic Scanner?
Yeah.
So you were saying in the
when you were calculating, when you
Mhm.
clicked on that, yeah, the box was over it. And I just wondered why you chose take profit 2 instead of 3. And, this is where I
Well,
get a little bit lost because I understand a whole lot until
mhm.
until you choose where
Right.
your entry level and then where you want your stop loss to be,
Okay.
which take profit it would be.
Well, see, here's the caveat to all of that. They don't give you the take profit or entry point for the take profit. They
Okay.
only give you the entry and the stop loss because that is the most important thing.
Okay.
You're basically calculating how much you're basically risking. So in a sense, when you do this percentage of
Mm-hmm.
your account balance, all right,
Yeah.
whatever that risk is, that is going to equal your loss based upon this lot size.
Okay.
All right. So it just basically calculates your lot size for you.
Okay.
Whatever this is, whatever this risk is, that is going to be the lot size in which you're going to use. And if you wind up losing, you're only losing that $35.
Gotcha.
All right.
Okay.
So that's it. That's it. So guys, that's all I have for you guys today. This is pretty much all I have for you guys today. I'll be posting this particular trade inside the group. I'm gonna clean it up a little bit more, but I'm gonna be posting this inside the Facebook group. Now, if you guys have any questions, any concerns, please let me know, whether it's in the post or even right now, because I really want to make sure that you guys understand this stuff when it comes down to your risk management. It is going to be the key to your success this year. It's going to be the key. All right. Now,
And Gwen had a question.
go ahead. What was the question?
The amount, how much should be in her account for trading gold?
How much should be in her account for the trading gold? That's completely up to you. You can start with $200. You can start with $50, but you got to understand whenever you're trading, you have to make sure that you're calculating your risk. That's going to be the complete, like, I don't even know this. It's basically going to be the golden rule to your success. Matter of fact, it is the golden rule to your success.
Yeah, it's not as volatile as Bitcoin or US 30 is concerned. So how do you compare that doing the risk to reward for something like US 30 or Bitcoin if somebody trades cryptocurrency?
Okay, so if you are trading cryptocurrency, it's a little different. I don't really trade a lot of cryptocurrencies. I just kind of stick to the Forex pairs. But the principles are still the same. You want to calculate your risk before you actually get into a trade. And you want to make sure that that risk does not exceed your maximum exposure. Okay. So it's still the same. We can, matter of fact, I'll tell you what, let's kind of look at Bitcoin right now. So you're looking at Bitcoin right now, and it look like Bitcoin is trying to push back up. This is an engulfing candle right now. It's 353. So you can basically anticipate that this market is going to push up a little bit more. All right. But once again, your risk to reward should be the same. So if you're getting in here, okay, if you're getting into the market here at this level, your risk should always be less than what your reward is. Anticipate exactly where the market is going. All right. She done pushed up from here. That was the last movement. Calculate it by just using measured moves. All right. So what we anticipate is this market coming up to at least about right here. At least about right here. Okay. Now, Is this a good trade? If you're going to get into it, is this a good trade?
Nope.
Nope.
That's all you have to do. That's literally all you have to do. Use this tool, and this tool is on site in the Harmonic Scanner as well. So right here, you can easily just put in this tool, okay? Now, is this a good trade setup?
Yep.
I'll say no. Isn't that a 1 to 2 ratio?
As
Bingo.
long as it's higher.
Yeah.
Now, is that a good trade?
Hell
Yes.
yeah.
Yes. It's 1 to 3.
There you go. There you go. Always make sure that your trades are at least a 1 to 3 ratio. Gotta have them. Gotta have them. That is going to be key to your success. All right. Key to your success, your risk management, and making sure that you understand the risk to reward. Gotta be at least 1 to 3. If it ain't 1 to 3, I ain't fooling with it. That's it. So, guys, that's my time. I love you much. So what we're going to do is I'm going to get this video processed and then get it posted out on YouTube and make sure it's in the Facebook group as well. And make sure that I actually put out the trade setup for the week for gold. All right. Now, any more questions before I let you guys go for the day?
Thank you so much. Saturday. I'm always back in yesterday. You guys make sure that you welcome this gentleman back. We have our fearless teacher back. And I also wanted to just welcome you guys, just take a look at the calendar because this Tuesday at 7 o'clock on my session, we're going to be going over pips. All right, how to replace your income with pips in the Forex market. So definitely you could start using that time to start really calculating how you could use this as a part-time income, really be intentional about it, and really be intentional about possibly leaving your job in the next 12 to 18 months, if that is something you choose to do. So Tuesday, 7 o'clock, I hope to see many of you on there. But I'll see you guys in the morning at 7:30 on, 8:30.
All right.
8:30 on Tuesday.
Yes.
You put down my red cup. Bye, you guys.
All right, guys. I'm going to see you guys later.